Welcome to another episode of the Kinvestor Report, where I chat with the industry experts to discuss the market, commodities, stocks, of the economy. I'm your host, Arlen Hansen. Today, we have a very special guest on the show, Simon Hunt. He produces a regular report on the global economy, China, copper industry, geopolitics, and has a newsletter which can be found at simon-hunt.com. I'm particularly interested in his commentary on gold and copper today. This interview is not investment advice. I'm not an investment advisor or financial planner or a geologist if I make any comments about rocks. If Ken or myself has any financial interest in any of the companies mentioned in today's interview, it will certainly be disclosed. Please do your own due diligence. If you like this video, you can tap that like and share button and be sure to subscribe to our channel so you don't miss any of our latest videos. So yeah, Simon, thanks so much for joining me today. How you feeling?
Yeah, good. Thank you. And thank you for having me.
So you've been doing this for a long time, right? A couple
Doing
more
what?
economic analysis for a long time, probably a couple more years than me. So
Yes, sir.
yeah, looking forward to some of the things you have to say here. Where are we right now in like the global economic climate, and what do you think some of our biggest risks are this year that we got to be careful for? It's so wild right now, right? You know, throw a dart.
That's a huge question to start the conversation with. Where are we in the economic climate? I think that the first 6 to 9 months of this year, you're going to see a weak US economy. You're going to see there are green shoots of recovery showing in Europe. I'm not convinced they're anything more than a flash in the pan. Everybody is talking about peace, 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 without questioning what is Russia going to give in return. And the sense that I get is that Russia is going to be very robust in whatever is agreed. And I think that it's going to be difficult for Trump to bridge a gap. Basically, Russia will not accept a ceasefire. So the longer the war goes on, the greater the territory Russia will obtain. I think the biggest issue that Russia wants security over is the future security of Russia. So many times, going back to World War I and World War II, etc., Europe has invaded Russia and has been turned back every time. And I think that if an agreement is reached, it's not just an agreement over Ukraine. It's an agreement over the future of Eurasia. And from that will fall out Ukraine. What Russia, I'm sure, does not want is a boundary line drawn along the Dnieper River, because it won't be so long that America will have hypersonic technology or the equivalent. And therefore, if the boundary line is the Dnieper River, it's not going to give Russia's radar systems enough warning. So really, one way or another, Russia wants control over the whole of Ukraine for security reasons. The second problem is that they are not going to accept as contingents of military to police whatever border is drawn up any EU country or any member country of NATO. That they won't accept. They've had too much bad experiences of trusting the West.
They're probably not the only ones.
All I'm trying to say is that the odds are that these negotiations over Ukraine are going to take months to conclude, if not longer. That happens, then some of the recovery that we've been seeing in Europe in terms of equity markets and a little bit pick up in PMIs, etc., are going to reverse again. If we go eastwards, I am confident, and I first went to China in 1993, and between 93 and 2012 was spending 3 months every year visiting about 80 factories across the country. And between 2012 and 2020, which was my last trip, I was spending a couple of months, but not traveling so much, just to my best customers. So I have a pretty good sense of feeling about China. And I think that their economy is going to surprise everybody on the upside this year. On condition that America does not go overboard in trying to contain China and doing their best to disrupt their economy. That is a risk, but I think at the moment I would go for good growth in China, certainly over the next 6 to 9 months.
Okay, so that's a contrarian.
Sorry?
Sorry, I interrupted. That's a little bit of a contrarian view I haven't heard with many of my guests lately. So I'd like to dive into that a little bit more.
Yeah, sure.
Yeah. So when you talk about U.S. trying to constrain, what are some of the things that you think they would be doing to constrain China?
Well, the first one that is a very disruptive change is that the State Department has issued a new, statement about Taiwan. The previous one was in September 2022. And in that statement, there was an explicit phrase saying that there will be no support for an independent Taiwan. In this new statement, that phrase has been cut out. China is up in arms about it. So I think we need to watch this space very carefully. There are some of my friends who say that actually what Trump is after is doing a mega deal with China. 2 of the most powerful countries come together and we can make music, as it were. Others point to the hawks in Washington over China. And you're seeing renewed sanctions, tariffs, etc., on specific products such as semiconductors and tech stuff and chips and so on and so forth. However, I balanced that out with Marco Rubio before becoming Secretary of State. His team produced one of the best reports on China I have ever read. It was full of detail. And the bottom line really was, you mess with us and we can mess with you. Which you can see already. China has stated, we're not selling you guys any critical minerals. That has a huge impact on the industrial military complex and on industry and on the tech sector. Where are they going to get their key products?
This is what I think is crazy, right? That the US really does have such little or such few, excuse my bad English this morning, rare earth production, like zero graphite production, right? Like where are they going to get these batteries for, where are they going to get these metals for all their batteries in their military applications? It's crazy to me.
Exactly. You go down the list and
yeah.
Oh, we can develop new supplies. How long will that take?
100 years. Right. It's not even just finding the mine. It's the infrastructure and supply chain all the way downstream,
Absolutely.
right? Like it just goes on and on and on.
Oh, yeah. It's 10 years.
Yeah. So this is a really interesting setup to me for copper then, right? If China is going to be coming, in your opinion, with some surprise economic growth here, like where is copper heading? Right? Like we're already at 460 a pound.
That's a very good
like...
question. Hold on. So let's come back to what I've been saying about the global economy. So we have weak to flat business activity in America in the first 6 to 9 months. We have a bit of a pickup in physical copper consumption in Europe at the moment, but it could easily be a flash in the pan. Certainly, industry people that I've spoken to are not convinced that this is for real. China's consumption will pick up, probably not until April to any significant extent. There's plenty of copper around at the moment. So I think then it's very likely in our work that between now and September, we're going to see a big correction in US and global equity markets. And that will cause weakness in copper and all the base metals.
Mm-hmm. It always does.
So and then of course, tracking back to what happened on Friday, a lot of speculation that Trump would impose a 10 to 25% tariff on copper, and what would that do? So a lot of buying of COMEX, selling of London. But first of all, if before a tariff was introduced on copper, it would probably have to go through Section 232 of the Ministry of Commerce's investigation, which takes 9 to 12 months. Secondly, what happened on the Friday when London saw that COMEX was at as much as $1,000 premium over London. They sold COMEX, bought London. Buying London the way that it was done created a backwardation. I can't remember the figure, about $140. Whereas we've been running for months and months and months with a contango of around 120 to 200. Monday, we saw prices start falling. The last I saw, there was a small contango. My sense is that between now and September, we will see significantly lower copper prices and other base metal prices. What changes it around? By then, Trump will be able to introduce his tax cuts, get deregulation off the ground, and with a weak economy, you'll find that the Fed will be cutting interest rates. The dollar, under these conditions, will start a multi-year fall, all bullish for copper. So I think what we're going to see from, let's say that we have a fall by September, of fall in the copper price to around $7,000. On our work, it could be even lower, but let's call it 7,000. We then have a huge, typical end of cycle boom in copper and other base metals that will take us into, excuse me, late 2027. And that boom will result in the copper price doubling to around $14,000. Let's leave it there, because what follows from that is not pleasant.
Okay.
Because the basic reason is that this will be an inflationary, highly inflationary period, reminiscent of what we saw in the 1970s and early 1980s, with the US CPI jumping to around 13%, as we saw in 1980. What does that mean for 10-year US Treasuries? Not 4 or 5%, but at least 13. And what does that do to a highly leveraged system?
Crushes it. Yeah. My dad got crushed back in 1980. He was a real estate developer, and yeah, interest rates went there and lost it all. So I'm a firsthand. I remember that as a kid, watching him go through that. It was tough, right?
Yeah.
So this environment is also, I'd say, is very good for gold.
Yes. I mean, I don't follow gold on a day-to-day basis, but the fact that every man and his dog and every investment bank is calling for higher and higher gold prices, common sense rather tells me we're going to have a correction. But corrections should all be bought. I think, well, I don't have to tell you guys that for a long period of time, the East has been draining West of its gold resources, physical gold. So on our work, thanks to Alistair MacLeod, China's citizens and institutions own approximately 25,000 tons of gold. The government, through different ministries, including the PLA, own more or less the same. Don't forget that whatever the PLA imports is not recorded in customs. So Russia also has much more than is reported, with the bulk of their 12,000 tons that we know of, it's probably higher than that by now, is owned by a company closely aligned to Russia's central bank.
Do you think any of these countries are truly reporting what they have? Like, I get this is what I'm reading between the lines here is you're saying this is what they're reporting, but who really knows?
Oh, yeah. I mean, so far as Russia and China are concerned, what they own is significantly higher than what's been reported. Significantly. I mean, the PBOC reports something around 2,500 tons. Well, I'm talking of 50.
Yeah, crazy.
But I think that China has long indicated that it will make a statement one day that its currency is supported by the gold that its citizens own. That will ruffle a lot of feathers.
Yeah, big time.
Yeah.
When it comes to, I think where we are right now, just like, what's your opinion on this? Is it feels like there's some renewed, like I think you call them green shoots in Europe, right? Like these little blips of optimism, right?
Yeah.
Do you think we're getting that like right now in the States? Like Trump's coming board, he's he's waving his arms, doing all sorts of things. The Americans are all feeling American, right? Like, yeah, we got this, and believing into his like rhetoric of this is what I'm gonna do is gonna make happen.
That will come.
Yeah.
But what is Doge doing? It's cutting employment in big numbers.
Huge numbers.
You look at the revisions that the BLS will be making and has made. The employment situation in America actually does not look robust, quite the contrary. So you are going to have, and then on top of that, you've got the migrant deportations. There's huge numbers. The government's been paying them.
Yeah.
And if you look at the recent employment data, I think this came out of an analysis that Doge did. I can't remember how many millions of guys reportedly aged 100, even up to 200, are receiving payouts.
What?
Yes.
No.
Yes.
Okay, that one's news to me. That one's good. Like I've seen some things
that was on X or Twitter, whatever you call it.
Yeah, I've seen some things that they've spent money on. Someone's digging it up on Twitter and saying, "Oh, spent $4 million on gerbil something." It just blows my mind. But what you just said, that was shocking as well. Okay,
so when you add this, I mean, again, the published CPI number, putting it bluntly, is a load of trash.
Yeah. I've always believed that.
Right? How so? The result of the elections told you that, because why were households switching from voting Democrats to Republicans? They could see in their daily house bills what inflation really was.
Yeah. I consider CPI like an adjusted EBITDA number. You can make it look whatever you want with an asterisk, right? Like that's,
Well, the guy that I follow on this, John Williams of Shadow Government Stats, takes all the government's manipulations of CPI back to before Arthur Burns in the 1970s started it. And what's real inflation? Last year, 10.8%.
it feels like it when I'm at the grocery store.
So when you look at retail sales, just adjust nominal retail sales into real retail sales using the official CPI last year of 3%. Retail sales went nowhere in volume terms.
Mm-hmm.
But think, even adjusting CPI to 4%,
Yeah.
that's really, and that's whatever it is, it's 1/3 of the economy, retail sales.
Okay, so a part of our show is talking about the economy here, and then we're all sorts of into mining and commodities. So if you were to kind of say, hey, these are the metals that I'm getting in positioned in for this year or the next 6 months, what are your top 2 or 3 favorite metals to be kind of hedging your bets with?
Well, I think copper.
Yeah.
I would go for copper, but I would not invest long term. I would only be investing, trading for 2 to 3 years. So if you're developing a mine, well, let's put it another way around. If you have a mine that you think will start to need to be, if you have a resource that you think needs to start being developed post 2028, that's going to be a great time to do it, because the world will be in a mess. Your input costs will fall dramatically. And then what emerges out of that is the next 20, 30-year boom.
Mm-hmm. A massive undersupply, lower grades, not finding
Well,
enough.
that's a different subject.
Yeah, yeah, yeah. Well, I think it was the Freeport CEO, and I've said it a couple times on my show. I think last year he said copper prices could triple and still take us 10 years to significantly increase our output. Wild, right? And
Yeah,
that's an
but
environmental permitting thing, right? Like that.
as I keep coming up, what is demand going? What's physical consumption going to do? You've got regular items like substitution. When you get prices certainly over 10,000, and probably where we are now, there's a great move to switch to alley. And in data centers, where you've got the huge boom going on from investors, fiber optics are penetrating that market. And from the reports that I've read by people who actually design data centers, fiber optics is going to increase their penetration of the market. EV cars, nobody's, or very few people are mentioning that actually the biggest car harness maker in the world, SMI in Japan, has publicly said to an industry audience 2 years ago, 40% of all wiring in EVs will be aluminium. Then, just to take it a stage further, in the aircon industry, which is a big consumer of copper, the biggest aircon maker which is a Japanese company, said again 2 years ago, based on years of research, we are switching all our copper tubing to aluminium.
The higher prices are fixing higher prices.
That's it works. It doesn't hit consumption straight away. If you go back to the 70s and 80s when Volkswagen started switching from copper car radiators to aluminium, it took about 5 years before it became a huge number.
Yeah, that's interesting. Okay, right on. Well, I promised only 20 to 30 minutes of your time, and you were very great. I'm very grateful for it. Excellent insight. I'm sure our audiences, I certainly heard some new arguments today, which was really interesting to me. I love the contrarian point of view. I love what you had to say, different from the other people that I've talked about or talked with. So really appreciate your time, Simon. And
if anybody wants to get hold of me, simon-hunt.com.
Yeah, tell us a little bit more about what you do then for your clients.
Well, I focus on copper.
Okay.
Which I've been a copper guy virtually all my life. But in order to do sensible work on copper, you've got to have sensible ideas on the global economy, on financial markets, geopolitics or geoeconomics. So I look at all of these subjects, not always concluding with the consensus view, but concluding with sensible conclusions. So from there, we take it into the copper industry.
Right on. Simon, thank you for your time. You have a lovely day. Yeah, you have a lovely day, a lovely week, and looking forward
to. You mean a lovely evening?
Yeah. You have a lovely evening and a lovely night. I'll have a good day.
And you have a great day.
Yeah, we'll
thanks for having me on your show.
Yeah, you're very welcome. We'll chat again sometime, Simon. Well, Simon, that wraps it up. Thank you for joining me on the show today. You can stay up to date with Simon and read his newsletter on his website, simon-hunt.com. And I think we found our copper guy from here on out. If you haven't already, be sure to join the Kinvestor Network by subscribing to our channel. Follow us on social media, on Twitter at KINCOMM at Kincom. And be sure to join up for our conferences that we put on a couple times a year. We just had one last week. It was a wild success. $4.5 billion worth of companies presenting their investment ideas to our audience. So until next time, Arlen Hansen of the Kinvestor Report.